Hey, it's back with priceactiontrading.com, and it is Thursday. It's March 28th. This will be our chart lesson for today. And real quickly, just a reminder, tomorrow is Good Friday. The market will be closed, so no trading. I won't come into the office, so there won't be a mid-morning report, obviously, if there's no chart anyway. So I'll be taking a long 3-day weekend, and um, we won't be back till Monday. So just make sure you make note of that. If you didn't know, no trading tomorrow. It is Good Friday, and the market is closed tomorrow completely. They won't even have one of the. A lot of times on the holidays, they'll trade till noon, but in this case, no trading at all tomorrow. So enjoy the extended weekend, take the day off, and we'll see you on Monday. But having said that, let's get over to the chart lesson. Here's today's chart, and you can see it's just not much going on today at all. This is on the daily. It's still only 3:45, but I doubt we're going to get much more movement prior to that. Just kind of a quiet day. Most everybody probably started their holiday today, would be my guess. Very low volume, very little movement, real tight range, and we had a little bit of a rally just about 1 o'clock or so, 1:30, and they've taken it all back and then some now. So I don't know what created that rally. Maybe there's some news item. I haven't looked or anything, but it's just kind of an odd trading day with very low volume. So very few bars today compared to most usual days. So my guess is a lot of people started their holiday today. So anyway, there it is on the daily chart. Let's flip over to the 2000 tick intraday chart, and we'll go through those trades and talk about a few things. And I have another thing I want to discuss. I've gotten a few questions about, but let's flip over there. Okay, here's my 2000 tick chart. And you can see we were just in a range until we had this little rally and breakout here about 1:30, 1:40, just between 1:30 and 2 o'clock. And we made a new high, and then lo and behold, the breakout fails. We get back and we trade all the way down, test the lows again, and we close on the lows. So not much change at all today. It looks like we're probably going to close down a little, but we could take that back before 4 o'clock. There's still 15 minutes left in the trading day. We will see. You can see there's not much volume going here. There's a few contracts trading here and there, but the market's not really moving, so I don't expect to see anything different. And you can see how few bars there are today. Very low volume. So, but let's zoom in here. The first thing I want to talk about, I've got a few questions about this. Before I say one other word about what I'm going to talk about here, make sure you listen to what I'm telling you. And this is the same thing I said before last time. But people never hear everything I say. They only hear what they want to hear. But this is a very advanced strategy that only somebody that is profitable should probably even consider. Now, if you're sim trading, practice on it and learn it and understand. But what I'm talking about here is engulfing bars. I've talked about this strategy forever, but it just happened to be in a specific instance where it caught a lot of people off guard, and so a lot of people listened, and a lot of people um, probably got trapped on it. And I guess they're talking about it in some Facebook Discord or forum or something, and of course somebody posts that it's a horrible idea and that I was irresponsible for even suggesting it. And I'm pretty sure I'd almost bet my right arm that before I even talked about it, I said it's an advanced strategy and it's only for certain, experienced traders that are profitable. But the only reason I talk about it and showed it, I used to not talk about these much, but I've been talking about this strategy on these engulfing bars for a while now. And why do I talk about them? Because I use it. And if I don't talk about it, then people say I'm holding back. I don't share everything. It's a no-win situation for me. If I tell you what I do, then somebody blames me for being irresponsible. And but I always every trade that is if it's advanced and it's difficult, I tell you that up front. And when I tell you that, that means it's not for 95% of you. But there's still 5% of the people out there that are asking about it and want to know how to handle it. And so I showed them how to handle it. Does that mean everybody should trade that? No. Even if you're experienced, if you don't like the idea, don't trade it. I said it was just an option. But let me explain this. Let's assume you want to go long right here. This bar is not quite, I didn't mark this because this bar is not quite good enough. I think it needs to be a little more bullish, but let's just assume this was a real bullish bar and you want to go long right here and it breaks higher first. And then all of a sudden it turns down and it comes back down here and it breaks out the low end. Well, if you follow the rules like you're supposed to, you put your safety stop one tick below. And look what happened. That bar ticked one tick lower and then reversed and went right where you thought it was going to go. And that's what it'll normally do on a range like this. And so the odds are probably with you that prices are going to go higher. Okay, I'm sorry, I had a little interruption. Let's get back to this. Assuming that you want to trade this bar to go long because it's bouncing off the support. And this is mostly you'll see this at support or resistance or maybe even on a key entry point occasionally. But I usually only like to enter on these engulfing bars if there's a big, if you're wanting to go long, there was a big bearish bar first, or if you're wanting to go short, it was a big bullish bar first. If it has a lot of stem and so forth, I think there's another one over here I saw this afternoon, like right here. I mean, that one, you know, you might go short on that one because it's a real bullish bar. But a lot of times they're kind of neutral bars and they have a lot of body more than they do, and they don't close on their high or low. But assuming you wanted to go long here, and this breaks higher first, if you're following the rules, you put your stop one tick below that, and then all of a sudden this thing turns down and it ticks one tick lower, and all they're doing is stop running. They're looking for stops. They know they're down there, and they're able to push it down there and run those stops, and then it reverses and goes exactly where you thought it was going to go. Well, people ask me, how do you handle that? Is there any way to handle that? Or you just take a stop? Well, if you're not sure that you read that your read was right, yes, you take a stop. You stop yourself out. However, in a situation like this, I know that prices are probably just stop running here, but I've got a lot more experience than you, so it all depends on your experience, your comfort level, how much risk you're willing to take. I think the reason that other one was such a big issue was because to get it below, the way you handle it is instead of letting it stop you out, you move your stop to the next swing, which would be here. You put it one tick below there, and you wait for this bar to close, and then you move your stop one tick below that. And if you get stopped out again, you get stopped out, you were wrong. But 9 times out of 10, if you've read this right, it's going to tick a tick or two below and run those stops and then reverse. And you wouldn't be taking on but about 4 more ticks here. That other situation, it was way down here, the next stop, because it was all along. So like in this case here, if you had to go way down here, it was more similar to this probably. That's 2.5 points. I think that other one was 3 points. So it probably garnered a lot of interest thinking, oh, that's 3 points more risk. Well, you may not want to take 3 points more risk, so you take the stop. But if it's only a tick or two to get behind the other stop, you might be willing to risk that other tick or 2 or 4 ticks. Right here, I'd be willing to risk that 4 ticks. And I'd move my stop over here. But as soon as this closes, then you move your stop 1 tick below that bar. And what you'll find is very rarely will it take out the previous swing too, unless you just completely read it wrong and prices are going the other way. So, you know, is it irresponsible for me to suggest that when people are asking me? And I warned them that this is an advanced strategy. If you're sim trading, I would suggest and encourage you to practice it, because that's how you learn on the simulator. Now, if you're not profitable and you're trading live, you're just a donor anyway, so it doesn't matter. You're going to lose your money. You might as well give it away here as give it away there. And I know there's tons of you out there trading live that aren't profitable yet, and you're just donors. And I've talked about that, and you know, I've explained that that's a hard way to do it. You're never going to get there trying to trade that way. You're going to go broke first. You have to learn on the simulator because you don't have deep enough pockets. If you had $1 million, you probably don't have enough money to learn trading live in the ES. It's that simple. Maybe in the MES, trading singles, you might last a bit. But in the ES, you're not going to last very long. It's just simple as that. So you need to be, so if you're not profitable, it doesn't matter. You should be on the simulator and you should practice this. if because you might see a situation one day where you want to use it. And if you've got experience with it, you'll understand it a lot better. But yeah, it's danged if I do and danged if I don't. If I don't talk about it, then people accuse me of holding back and I don't trade the way I teach. Well, that's the way I trade that. If I like the trade. Now, every time it breaks lower, do I move it every time? No, it depends on how I think about the read. Most of the time I do because I'm pretty sure I had the read right anyway. Um, it's just a stop run. And that's all this was. This was a stop run for those that jumped in early. They ran their stops, and then they ran it down here and touched that line again, and then shot it. Look how that bullish that ended up. Now, I don't know if it broke higher first and then went lower. It might have went lower and then went higher. I can't remember how that played out. Because I didn't know I was going to talk about this. I don't like that setup anyway because that bar is not good enough. So I wasn't really paying any attention to it until after the fact when I went to look for the example of this so we could talk about it. But I hope that's clear. It's not for everybody, and it's a temporary move, just long enough for this bar to close, and then move your stop one tick. So let's say you did that here and you put your stop one tick lower and you were still wrong. Well, you lost an extra tick. It's that simple. Instead of losing one tick, you lost two ticks. That's all. That's the only difference it would make here. And that's the way it will usually be. You'll lose an extra tick or two. So, but now if you move it down here and it just keeps going, yeah, and it takes that out, then yeah, you'd lose 2.5 ticks. But in this case, you're only going here, so you only would have lost 4 ticks. You'd have lost an additional 4 ticks from the original 4. Let me just verify that before I tell you that. I don't want to. Actually, it looks like it would be 5 ticks, so 5 or 6. Yeah, because you'd be 1 tick below it. So you would actually lose 6 ticks there. But you wouldn't have lost because you would have ended up moving your stop below this bar and it never even came close to testing it again. So you wouldn't have lost anything. It would have saved you a loss. So it's up to you. I'm not saying it's for everybody. Again, just like I told you the other day, and it's an advanced trade. And it's not for everybody. So, but if you're sim trading, why not try it? Why not? This is the way I trade it. I'm just telling you how I do it. And do I teach that in the manual? No, because it's advanced. But I talk about it in the video because there are some people there's a few people that can trade that and understand it and want to trade it that way. They asked me about it, so that's why I explained it. So anyway, yeah, that's how you would handle that. And for those that have asked me several times about it, and for the couple of you that asked me, to explain it because they're really confused now because of what somebody else said in Discord or on some Facebook chat, and I tell you, don't go to those places. If you want to learn how they trade, go listen to them. If you want to know how I do it and how the strategy works, come listen to me instead. I just don't understand it. Why all these people want. I get it that people think it's helpful to go talk about trading, but you're talking to people that don't know how to trade, that aren't profitable, so they don't really know. And that's the bottom line. These people don't know. If they were profitable, they wouldn't be sitting up in there talking about it. They'd be trading. Profitable traders do not go to Discords or chat rooms. They're busy trading and enjoying their life. Trust me, I'm one of the stupid, dumb ones that actually trade. But I never go to Discords and I never go to chat rooms, and I tell everybody not to because it's a waste of your time. You're not going to learn anything there. You're going to learn the wrong things. You're going to hear stuff like this that confuses you. And, that's all I'm going to say about it. I haven't mentioned chat rooms and Discords in a long time, but I don't believe in them because there's nobody there that knows for sure. There might be some people that can read this chart that are learning, that have gotten pretty good at reading it after the fact, but if they're profitable, they're not in that. I promise you they wouldn't be there. They're not making money. They might have some winning trades and some streaks, but in the long run, they're losing. Or they wouldn't be there. It's simple as that. Because they would be busy trading, and when they weren't trading, they'd be spending their money and enjoying their life. So that's the problem with those places. The people there that are running their mouth and making all the comments don't really know. They're just like you. They're trying to learn. They're there hoping they learn something, or they're there trying to act like they know something, and because they enjoy the power trip they get from it, or enjoy showing they know more than somebody else. And I'm not trying to take a dig at any of these people that said any of these comments. It has nothing to do with it. My skin's thick. I've been doing this a long time. People have been talking about me for a long time. They've tried to shut me down. They try to hack me 100 times a day. They've tried everything they can to shut my mouth because they don't like my message. Most of them don't, because most of the people doing this stuff are selling you junk and stupid ideas and wrong ideas, and they hate my message. But I don't care. I've been doing this for 20 years, and I'm gonna keep doing it till I retire. And when I retire, they'll be rid of me. But I'm looking hard for somebody to take my place when I do retire. And hopefully by then I'll find somebody that's capable of doing it and hand all this over to them, and they can keep the message going for another 20 years. And some people will find that good message, and they'll learn the right things, and they'll become good traders. The rest of them will be spending their money and taking your money. And I'm not saying everybody out there is doing that, but 99% of them, they're selling you junk or stupid ideas. So just be careful. That's all I'm saying. I'm not naming any places or anybody. The people that I'm talking about know who they are. If they listening, why are they listening? Why aren't they working on their own stuff? Why are they over here listening on my side? Because they don't know and they're trying to learn. That's why. So don't let these people con you. Don't let people fool you. And I'm not saying that the people that said this are trying to con you. I agree with him to a point that this is not for everybody. But I said that right up front. It's a advanced strategy that is not for everybody. But if you want to know how I handle it, that's how I do it. Now, if I'm irresponsible for telling the truth, I'm sorry. But I'm never going to lie to you. I'm always going to tell you the truth. I'm always going to tell you how I trade. And I've had that. I've been accused of that I don't trade like this, that's all a lie, that I trade a different way, and I share I don't share what I really do. And that actually came from some of my own members that learned from me that actually got profitable. I have no idea why they would say that. I don't understand it, but that's been said. And so, but once again, believe what you want to believe. I'm telling you how I do it. I'm showing you the strategy, an optional way to handle this. If you're not profitable and you're trading live, then do like you always do, take the hit and take another loss. But if you're sim trading, which you should be, trying to learn and get profitable, then practice it. That's how you get better. I had this long spiel the other day. That's how you get better at this, by sim trading every day. Because you can't get enough experience trading live, because you can't you're on there taking 2 or 3 trades a day, and you're never going to learn that way. You need lots of experience taking every trade. So get on the simulator, take every trade you see that you think fits our criteria. Don't worry if you think you're right. Don't worry if you think you're wrong. Don't worry if you take a hit. Just take the trades. And then at the end of the day, go back, and that's when you try to decide, all right, which ones was I right on, which ones was I wrong on, what did I miss, what did I do wrong? 9 times out of 10, you'll see what you missed after the fact. And you learn from that. And if you do that every day, and you correct the problems that you're learning, sometimes you'll have to learn the hard way several times, and then finally you'll say, okay, I know now, I've made that same dumb mistake 10 times, I'm not going to make it again. And you still might make it again, but you'll start to figure out where you're making your mistakes, and you'll correct them, and you'll get better. But you can't get it. The experience is the key to this. You can learn the strategy and how to pick them out after the fact pretty quickly. Most people in 6 months to a year can learn that, but they still can't get on a live chart and do it with live data in real time because they just don't have the screen time and experience. This is a skill. And if you want to hit a baseball, you can't just read about hitting a baseball and pick up a bat and go hit a baseball. You have to go practice that skill that you read of how they do certain things. If you want to be a power hitter, if you want to be a bunter, you have to read about those strategies, and it helps to have a coach to show you, which is what I'm doing here, showing you the basics. And then you have to go practice them every day, because you won't be able to do them without practicing them a lot. You couldn't just read about it or me even show you about it, and then go out into a real game and swing the bat properly and make that hit or whatever the skill is, playing the piano. I can teach you the keys and the basics and how to peck out something on the piano, but how do you get to become professional where you can go play in a professional venue? You have to practice every day over and over and over, and it takes years, right? It's a skill. This is a skill, and it's like any other skill. You have to practice every day, and you have to study and practice and study. It takes lots of repetition. So anyway, we're 20 minutes in here, another one of these days, and I haven't even got to the chart lesson yet. So I'm going to go through this pretty quick. This is the last one this week, and the last day we'll work this week. So, but I'll try to get through these, and we'll wrap this lesson up. I hope I answered the question. Yeah, it's not for everybody. And the person that said that I was irresponsible, if he feels that way, that's his opinion. But somebody asked me how I handle it, asked me if I'd talk about it. Several people have asked me, and so I showed them. But with that comes the disclaimer I always give. This is an advanced strategy. It's not a second entry off a key entry point that everybody should be able to pick out. This is something that you need to know what you're doing, or else don't use it. But if you're sim trading it, do it and practice it. Not too difficult. And I can tell you, if you go study a chart, you'll see. If you start doing this, you'll see that if it's at a key entry point like this, most of the time it'll go one or two ticks in reverse and go right where you thought it went. So this is a way to resolve that. Nothing more, nothing less. And you might get it wrong sometimes. So if it's 3 or 4 points, don't risk it. Just take the hit. Or decide, hey, I'm willing to take another point and move your stop a point. But if you put your stop anywhere if you place your stop anywhere except one tick below the previous swing, you're still vulnerable, basically, because those swing lows are well protected, especially if prices are going the other direction. So keep that in mind. But anyway. You really had to be patient this morning. There was the 7:30 news, the unemployment stuff, so you wanted to be flat for that. And there's just nothing really going on that I would be willing to risk. This one was tempting, except, again, the bar's so big. It's a 12-tick bar. But you do get your close outside and a new low, and you get a nice bullish bar. So what you might do is put your stop, wait till this ticks higher, and drop a limit order a little bit back and see if you can if you really like the trade. Again, if you really like the trade, drop your limit order back here and try to get a better entry, and maybe you will. And you see you could have gotten in, probably filled all the way back to here, and then it goes right where you thought it was going to go. But again, you need to know, pretty much, you need to be a good chart reader, and you need to understand what's going on here. Because this bar is so big, prices obviously came back, and that's what happens. Most of the smart traders are not willing to enter up here. So they might drop a limit order in here, and they start to see those orders, and they come back here and they start filling them, and next thing you know, it starts going higher because they're buy orders. So that's a possibility. I'll mark that one green. I didn't like it in real time because it's real congested too. And to really trade it there, but it did close outside higher than that last high. So that's a really bullish bar. So there's some potential there, but I'm not crazy about it. And of course, you come up here and you get your close outside this green bar. You get a couple of legs back. That's technically a second entry, but again, it's more congested there, and it's a little break. It's probably going to snap back, but I'd want a higher low. You don't get it. And you actually get a second entry short here, but the signal bar is no good. And plus, it's during this news hour, so you're just, ignore it anyway. Then we run down, close outside, move to a new low. And we start up, and you get a higher low here. Now, this one pulled back almost to the original, got all the break-even stops, and then turns up. Go long right there. It's a higher low when we bounced across there multiple times now. So really, since way back here, we've been going up and down from the midline to the high. And this is no different. It runs back up here. You get a close outside. It runs up, and now you got a 1, 2, 3 triple test with a big bearish bar. And unfortunately, it gets just enough to get a scalp. There might be a little extra in there. It wasn't much. It's just a little. I think there's 7 or 8 ticks there. Yeah, there's 7 ticks there. So you got an extra tick or so, but it's a good trade, and then it runs back up. And that one was tempting right there, but that's just a little too congested. I'd sit tight. And lo and behold, it runs up one more time. And here we are. Here's you another engulfing bar. This actually breaks higher, fails and turns down. Now, I wouldn't enter this way down here. It's moved too far, and it didn't get through the EMA, so it could bounce right there again. But if I liked when it broke low, higher and turned down, this is such a bullish bar that maybe you go short 1 tick lower there, because there's plenty of room back to the EMA if you do it that way. And so that would have been a nice trade, but it's a little, you're always better to wait on a lower high here. I say that every time, and people still don't hear it, but make sure you hear that. Because this breaks out and makes a higher high, it's always better to wait on a lower high. Now, tomorrow somebody will take a trade like this, and it'll fail, and they'll say, you said that was a good trade. Well, this has a lot of potential, but it's aggressive, and it's a little bit more risky. So that's why it's green. Come up here, you actually get a second entry long here, but you're not looking for longs. We're expecting this to go lower, so we're just waiting on it to finally either get us a trend up higher or turn down. And so then you get a first entry, and there's technically a second entry there, but no setup. And we're just chopping sideways, and then finally you get a 1, 2, 3 triple test right here. This again, we got another engulfing bar. It breaks higher, turns down. This is too big a bar to go short down here, so you can't go short there. You have to do this on the engulfing bar, and it's really a repeat pattern of that right there almost, except you also get a triple test. Look how that setup looks so much like this. You got a couple of bars up, it breaks higher, fails. So I like that as a repeat pattern. That's why I made this one red. Plus you get the triple test, which you don't have that up here. And then it drops on down, and it's just working sideways. But look at that resistance across there. It runs all the way across here, really. But you don't get a setup off of it. Here's a good signal bar. Here's a good signal bar, but you don't have any room to get out. Here's another one. No room to get out. And it bounces, and that signal bar's not. It's too bad that wasn't a very good signal bar. It's still inside that channel, so it's a little. But because it's in a range, if that would have been a good signal bar closed inside, I'd say if this bar would have been on the high, I'd say take that trade 1 tick below it. But we didn't get that. And we come back again, and finally you get a decent bar. And look how many times we've turned down across there. And this is actually a first entry. And over here, it breaks higher, turns down. See how there's no body there? Don't trade that on the engulfing bar. Wait for that to close, and then go 1 tick below it. And there's another nice little trade. Comes back again here, but notice how this one made a higher low. I'm sorry, a higher high. Higher than any of the rest of these. Now you probably want to wait on a lower high. I mean, you may still, again, you could argue for that to be green, especially with the 2-bar matching high. There's just not much room back to the EMA either, which, on a range sideways, we're not that worried about the EMA, though. So I think you're okay to probably, if you take that, if you want to be aggressive. But again, hear me, that's a green bar. I mean, a green arrow. That means that's aggressive. It's not for newbies. It's not for everybody. If you understand it, and you can read the chart and you get what's going on there, then maybe you take that trade. And notice we try to go higher a couple more times, and you actually get another triple test across here, but this is technically a first entry, second entry. Now, I wouldn't trade that on a second entry. We're really not counting second entries in here. It's just kind of congested. But you can see we made a lower high there. It's a lower high basically with a nice signal bar right off the resistance that we've tried to breach 1, 2, 3 times. It's like a triple test. I like that one. Look at it how it goes. That's what the smart traders are waiting on, that triple test. Once you test something 3 times, if it don't go, it's probably going the other way, even if it's just a little ways. I mean, that right there was enough to reverse it and look at it go. And they'll do that a lot. They'll fail it out. They try to get it out of there and can't. So then they'll reverse it the other way, and they'll get a bunch of sales built up there. So they got a bunch of people piling in short here. But notice we got a break here of this channel. This is really more sideways, but there is a kind of a downward bias there, and we do get a break, but we don't make a new low there. But the thing is, they get a bunch of sellers in here, and then they reverse it. And those sellers, they realize I either got to take profit or I got to get out, and they start buying, and a lot of them put their stops up here, and once it hits them, boom. And then those stops run out, and you get a close outside, and boom, it comes right back again. It comes back and tests the breakout area. So that's what this is. It's a pullback to test this breakout of this last high here, these last couple of highs. And so now you got this big green channel on the way up, and you don't have a retest yet. So you actually get a second entry here, but that's an inside bar. Stay away from that. But to me, really, this looks like a leg down, first entry, and it pulls back. So you could treat that like a second entry or a high or low, either one. It's moved a little bit to be a high or low. So it's really more like a second entry. And here's that engulfing bar again. I think this broke lower first and then went up. But if you were trying to go short here, this would have been a bad place, because really the prices are trying to go higher. This would have been a bad read. And if you moved your stop to up here, actually it would have been up here, you would have eventually gotten stopped out. But once you saw this triple test, you'd probably want to reverse right there and go long. But you can see it, 1, 2, 3. Triple test, nice bar, go long. And again, this is another engulfing bar. It breaks lower, turns up. And that's a big bearish bar. You could go long one tick above that, or you could wait till it closes and go long there. It's a triple test either way. I like it either way. And so just be careful with those. If you're not, like I said, if you're not profitable and you're not on the simulator, don't trade engulfing bars. Now, sometimes you get stuck in them, and I think that original trade that we talked about earlier that I spent 20 minutes on, it was one that you would have entered it long before it became an engulfing bar. And that's that's the whole point. How do you handle that? Do you just take the loss, or is there some other strategy to get around that? And that's my point for showing you what I showed you. Do you want to risk 3 points? Probably not. But in this case, you risk another 5 or 6 ticks. Maybe you, especially with all that support across there, probably so, because you see it went 1 tick lower, reversed, and all they did was run everybody's stops that tried to get in early. That's what they did. And that's what happens. There are a lot of times they're stop running. And generally it's hard to run below a previous swing. But the problem was you thought this was going to be a swing low, and it wasn't. The next bar made the swing low. And so you still had the right idea. You just were a tick too, you were a little bit too early, and you let 1 tick stop you out, where you might have taken a risk of 5 or 6 more ticks and had a winner. It's a trade-off. You have to figure out in your mind, are you willing to take the extra risk? Do you take 3 or 4 or 5 points? No, but 3 or 4 or 5 ticks, maybe. It just depends on where you're at, what your level is, what your comfort level is, what your risk level is, and how good you are at reading the chart. It boils down to those things. Now, is it for everybody? No. And I'm pretty dang sure I said that on the last video. But people only hear what they want to hear, and they forget a lot of stuff that I say. I mean, I do. I say a lot of stuff, and it's hard, and a lot of this stuff, people are new, and it takes a while to get it in. But if I clarify that this is risky, it means that you probably shouldn't try it. Or no, there's no probably to it. It means you shouldn't try it unless you're on the simulator. And then if you're on the simulator, it doesn't matter. You're just learning. That's the whole idea behind being on the simulator, so you can learn and get screen time and experience trading live data. You don't use real money, but it's live data. I mean, I wish I'd had that opportunity when I first started. it would have made all the difference. That's the thing about it. We got the greatest tools in the world now to learn, and people won't even use them. They can't wait to trade live. They think they're going to be different than everybody else, and they go out and they're donors, and they make a mistake, and they donate all their money to somebody that can trade, to a professional, skilled trader, when they're not skilled. It doesn't matter how high your IQ is. In fact, if you got a real high IQ, your common sense is going to stab you in the back, because prices don't move by common sense. And that's what happens to a lot of smart people that try to become traders. They trade. Your common sense has served you well your entire life, and you think, and so it's wise to listen to your common sense, but unless you're trading. If you're trading, don't listen to your common sense, because it'll burn you every time. It'll send you in the exact wrong direction every single time in trading, because prices don't move by common sense. They move exactly the opposite. I mean, you've heard about people say, I'm just going to be a contrarian trader and trade exactly the opposite of what I think. And the reason is because they're going against their common sense. And they accidentally stumble onto the right movements in price because they're not using their common sense. I mean, it's uncanny, but it works sometimes. I've heard of people, that's how they got successful, and then later on they realized they learned price moves, and they realized, well, no wonder I was having so much trouble, because I was trading with my common sense, and it doesn't work. It doesn't work in trading. So anyway, gonna have a long weekend. Plenty of time for plenty of people to watch this video and mull this over and decide how you want to trade engulfing bars. It's not for new traders. It's not for inexperienced traders, unless you're sim trading. And then you're just trying to learn it. So I highly recommend you try to take every trade that you think fits our criteria and trade it exactly how I'm teaching you, and do that every day. Take them all. That way you're getting lots of experience. And what does that do? Not only does it give you experience, but it starts to give you confidence when it's working. You start to see, this does work. I was able to see that and figure that out and take that trade, and it worked. And that gives you confidence, because people will tell me, how do you have the confidence to buy when it's coming down real hard or coming up real hard and hits this resistance? Because I see it happen every day. And if I wait for the right setup based on the strategy, then it usually works. Will you get it right every time? No, you're still. One thing you can count on is you're going to have losses if you're going to be a trader. It's just part of what we do, because you're going to make a mistake, or you're going to misread something, or you're going to get an engulfing bar that's going to trick you, because that's all that is. That's just a little short-term trick, an engulfing bar. They either tricked you into the wrong direction, or they tricked you on running your stops. It's one of the two. But if you're reading this right, they're really just tricking you on running your stops. Like, you probably were a little early or whatever, and the timing is so key in entering. That's why we use these patterns, because they really help our timing. Because you can have the right idea and be a bar early or a bar late, and you're going to have a loser. But if you enter it just right, you read it and you enter it just right, it works 9 times out of 10 if you're reading it right. And yeah, it takes a while to learn to read it right. So anyway, not much else I can say. This is going to be almost 40 minutes, and I apologize for getting back on my soapbox, but I had 2 or 3 emails wanting me to clarify this once again, that there's a lot of confusion in some Facebook posts, and people are, saying that you don't want to do that. But it's a choice. Is it for everybody? No, I said that the first time. But if you're sim trading, I would highly suggest you try it just to see if you can do it. See, to prove to yourself what I'm telling you. But we saw a bunch of these bars today. They didn't really set up properly. Like this one, I don't know if it broke higher and turned down. It may not have even happened that way, but I'm just showed you that as an example. Let's assume it went higher first and failed and turned down and took your stop, and then look how bullish it closed. If that's how it played out, that was the whole idea, was to run those stops there. If it went lower first, it was just still part of the down move. But anyway, I'm going to wrap it up. I hope everybody has a great Easter holiday. Enjoy the 3-day weekend. I don't have to tell you not to trade tomorrow, because you can't, because the market's closed. So Go have some fun with your family or whatever, or play with your kids, play with your dog, go play with your hobby, whatever you like to do. It's always good for your mind to get away from trading for a day or two. I love the weekends, and I love the 3-day holidays because I come back more refreshed. When you've been doing this for years, you need that. And this becomes a job. It becomes boring. I mean, that's why I like to teach, because I get bored. I get bored trading. And so the teaching part just kind of happened. It was never planned. I never intended for any of this to be what it is today, but it just kind of happened. And I enjoy it. I got thick skin. I don't let people's comments or people's opposite opinions sway me, because I know how I do it and I know what works, and that's what I teach. And it's there if you want to learn it. If it's not for you, then I'm not twisting your arm to come here and listen to it. So there's other places out there you can go. You may not learn as much. You might not learn the right things. I can't guarantee that. In fact, I know there's a lot of places out there you'll learn exactly the wrong thing. But, go with your heart, go with your gut feel, go where you think, because generally you're going to be right with that. So, stick to that. And if your opinion is different than mine, I'm not mad at anybody. I'm not trying to chastise anybody. I'm just saying, your opinion is different than mine. That's okay. If you think I was irresponsible for answering the question somebody asked me how to handle that, then that's your choice. And there was the other part was they said I was just trying to cover up for a trade that I liked that lost. Now, I have no reason to do that. I mean, that's just people. That's not the first time I've heard stuff like that. If the trade was wrong and you lost, I'd just say you lost. So it's there. It's that simple. The trade either worked or it didn't. I'm not going to make an excuse. Very rarely will you see a trade pattern that we do, if it's read right, that fails. Will one fail? Yeah, usually it's going to be on an engulfing bar too. So it happens. That's why we can only get to 90%. Otherwise, we could probably get to 100% and have 100% streaks for long periods of times. But we can't. We always end up getting a loser somewhere, because it's just the markets. It's the way it is. You're going to have losers. So, I'm certainly not trying to make any excuses. Was I irresponsible? That's your choice to decide. But, like I said, I'm damned if I do, danged if I don't. If I don't tell you how I do it, people tell me I'm holding back. I'm not telling you how I trade or whatever. But anyway, I didn't mean to get back on this. This video is way too long already. I'm going to wrap it up. Let's end on a good note. Hope everybody had a good trading day. I hope you have a great extended holiday weekend. And we'll be back again to do it Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.